we'll talk about tariffs, and we'll talk about the Fed, at least from the president's lens on tariffs. His point, once again, is that we're collecting all this money in tariffs.
You know, which is not the way to be thinking about it. Collecting the money is like putting a tax on people. Yes, the Treasury collects money then, doesn't mean it's good for the economy. I don't think any economist thinks that tariffs are good for the economy. And, you know, it's on with China, it's off with China, it's off. You know, the uncertainty, I think, is a cloud that's hanging over the broader economy, which I think for the year is one of the reasons you've seen such a big divergence between a relatively pessimistic bond market and a much more optimistic stock market. But, you know, one other thing about tariffs, he's also now he's thrown out new possible European tariffs. And my last name is Stewart. I'm of Scottish descent. And I was particularly distressed to see that what he wants to target is Scotch whiskey. Now, I just want to point out, he has a golf course over there. Why is he targeting Scotland, of all places, a strong ally of the U.S.? I just want to put it out there. I'm very opposed to tariffs on Scotch whiskey. But I'd love to see some of these things resolved. I'd love to see a quote-unquote victory for the U.S. in one of these things so we can end the uncertainty, whatever it is. I think that has definitely been a cloud over future growth.
Huh. In what form do you think that'll take? I mean, at this point, or is it just too dense to see through that cloud?
No, I think a deal with China would be a very big positive. And, you know, any improvement, I think, would be greeted very favorably by the markets. I mean, I think everybody agrees that there are, you know, structural issues in the trade relationship with China that should be addressed, that can be addressed. It looks like we were close to a deal at one point. We're not going to get everything we want in one deal. I think there's a lot of potential there, and I'm not involved. I don't know quite what happened at the last minute. I don't think it helps to be insulting people or saying, you know, we're going to humiliate you, or we're going to win, or we're going to crush you, that kind of language. But I think there's every possibility for a deal there.
You know, without getting to the tit-for-tat dynamics about it, I think actually Europe has tariffs on American bourbon, too. So whiskey seems to be a war bed, I guess.
Yeah, I know. They put the bourbon on, you know, which is a big Kentucky product, and Mitch McConnell's state. But they did that after, you know, we did something else. And that's what gets, you know, that's typical of these things. You know, you do one, then they do another, then you do another one, and then it just keeps ratcheting up, and it doesn't help anyone.
Which, of course, begs the question. The other area that investors are very focused on right now is the Fed. What we hear from Chair Powell later this week when he gives his testimony to Congress, and what it means for possibility of a Fed rate cut later this month, especially in the midst of all of this swirling uncertainty, and what it means for global economic growth and the effect on the U.S.
Well, I think the uncertainty is one of the reasons they probably will cut. And, you know, the employment report last week was a surprise that it was so strong. But I wouldn't put too much emphasis on that. You know, the yield curve, which I think the Fed does pay close attention to, is still not great. You know, it's inverted out to the 3-5 year range, and then it just barely, you know, gets flat when you get to 10 and 30 year. That's not a prescription for a healthy economy. I think the Fed would love to see a much more quote-unquote normal yield curve, and the only way they can affect that is to lower the short-term rates, which I think there's a high likelihood they're going to do in July. And then all the weakness that came in, you know, the stock market in May, then the reports of, you know, global slowdowns, the low interest rates in Europe, practically every other indicator is pointing towards a slowdown. And I think jobs are, at best, a concurrent indicator. They're not a leading indicator. They lag, and so I wouldn't put too much emphasis on that strong.
Jim, what do you make of the president's constant jawboning of against the Fed, particularly Chair Powell? And do you think it in any way puts pressure on Powell to sort of once again show the independence of that body?
You know, I think Powell has said that he's going to ignore all of that static, and that is what he should do. He should not do what he's asking him to do, and he shouldn't do the opposite just to prove that he's going to defy the president. He and his colleagues on the Fed should be sticking to the data, and I think they probably are. I can't imagine that they wouldn't. And I think that the jawboning would have more impact, would be more interesting if it actually showed some understanding of the way interest rates and the broader economy work, which I don't see. I mean, maybe it's there. Maybe there is a case that, you know, needs to be made. I'm not saying it's wrong, but it just hasn't been articulated. So I think the president at this point lacks credibility here, and I think the Fed has been right to completely ignore it.
I guess he would probably respond by saying, after 30 years in real estate, he knows somewhat how rates affect asset prices, right? So his point about the market may not be entirely wrong.
I'm not saying it is wrong. I mean, you could make the case that he was a little bit ahead. You know, he started calling for cuts, and then the Fed sort of came around the data. He was a little ahead of the data there, and you know, again, if he's got the data, if he's got a basis for this, I'd like to hear a little bit more about it. The fact that he was a real estate investor for a long time, I don't know. That gives me pause. Real estate investors are notoriously bad at predicting the direction of interest rates. When you look at the boom and bust cycles in real estate, I think that pretty much.
They're good at getting tax breaks, though.
They are great at tax breaks.
We're going to learn a lot more about rates later in the week. Jim, thanks. Good to see you.